angel fund, we mean it's a different approach than what we know as angel syndicates or angel clubs. Because in the angel fund, we have a group of angels investing in the same portfolio of startups. So it's a more long-term approach. Like we angels, we are together investing in a specific thesis, and we are building a portfolio around this thesis. So we make decisions collectively together, and we invest in the same startups.
Hey everyone, this is Prashant and I'll be your host for the VC the next podcast. And today we have Cintia Mano with us. Cintia is the CEO of COREangels, a global community of angel investors investing in early stage startups through portfolio funds. Founded in 2019, COREangels enables first time angels to take a less risky step and experienced angels to enjoy a more convenient and fulfilling journey, guided and supported by fund leaders dedicated to the role. In this episode, we talk about what are angel funds, how are angel funds different from angel syndicates and VC funds, how angel funds are a great way to start angel investing for new investors, who should and who should not angel invest, how COREangel facilitates angel funds across the world, and so much more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10x, where I help VCs start and run their own podcast. While I was running VC 10x, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So, if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So, if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey, Cynthia, so good to have you on the VC10X podcast. How are you doing?
Thank you. Thank you, Prashant. I'm doing pretty well. Thank you for having me.
Yeah, it's a pleasure having you on and looking forward to talk all things angel investing with you. So to start things, can we first have your story and how you got into investing?
Okay, good. Yes, well, my story starts with being a developer. So, in the very early stages of my career, I studied computer science, worked for software development. Then I did my MBA, started working for consulting, corporate career for many years. And then I decided to leave this world and to become a founder of a startup. Okay, it changed a lot my life for sure. Not only professionally but also personally. It's a huge challenge. And after founding the startup, I started mentoring some of the startups, especially the ones developing B2B solutions, as many of the founders, they were not kind of aware of how to approach big companies. So I started mentoring them. And when I started doing this, I realized that we had many incredible teams of founders trying to address solutions to big problems and big markets, but many times they were lacking funds, and the majority of times in the early stage they don't need that much money. They need some money to start to validate the product, to go to the market, and to start building a solution that is really needed. And this amount of money, in the very early stage, we don't have much money available to these founders in this stage. So I started feeling that, well, I should contribute with something more, not only mentoring, advisory, but also, who knows, maybe investing in a startup. But the thing is that I thought I was already an investor in many other types of assets, like real estate, stock exchange market, and this sort of things. But to take this step and start investing in a startup was kind of difficult for me. So between wanting to invest in a startup and really doing an investment, making an investment, it took me some time because I didn't feel prepared. I didn't feel I had all the information and I wanted to take more conscious steps. Right. So then I met a group of angels and I started investing together with them. And this is how I ended up becoming an angel investor.
Yeah, that's a super interesting story on how you got started. And now you're at Core Angels. You're the CEO of Core Angels.
Mm-hmm.
So tell us about what is Core Angels?
Sure. Yes, COREangels is a network of angel funds. Okay, and by angel fund we mean it's a different approach than what we know as angel syndicates or angel clubs. Because in the angel fund we have a group of angels investing in the same portfolio of startups. So it's a more long-term approach. Like we angels, we are together investing in a specific thesis, and we are building a portfolio around this thesis. So we make decisions collectively together, and we invest in the same startups. It means that we have a lot of discussions before deciding to invest. But once we have invested, the dynamics around the startup, like the kind of support and contributions that the angels can give, is not only one angel, but it's a group of people with different and diverse background, expertise, and willing to really support them. So in the end, Core Angels today we are 11 angel funds. So we have 11 portfolios of startups in different parts of the world, majority of them in Europe, but we also have one fund in the US, one in Brazil, one in Chile, one in Egypt. So all of them, they share the same model, they share the same approach, but they have their own investment thesis, they have their leaders, they have their own process of deal flow, decision making, and their own angels investing.
Right. That's a very interesting model, and like I'd like to dig deeper into that. So, how are these angel funds started? So, is Core Angels facilitating the start of these funds, or is it like the
Yes.
members raising hands? Okay, I want to start a fund. How does that work?
No, yes, yes. Actually, what we do is we have designed this program that we call the Angel Fund Launchpad. This is a program that whenever we are contacted by an angel, usually it's a person that has been doing some investments in startup, and this person wants to start a fund, okay? But they don't want the typical VC fund approach because they want to do things with some of their colleagues, people that have been investing with them, and they want to focus on a specific thesis. So they contact us and say, well, I've seen your model. I think it's very interesting. I would like to lead something like this. What should I do? And then we talk to this person, we analyze the profile, and whenever we have this person ready to start a program, then we start this program that lasts like 3 months. When we are like together with these leaders, we are designing, developing the fund, the idea of the fund. And then in a more hands-on phase, we start building the fund actually, like preparing what are the main parameters of the fund, like what is the size of the fund, how many angels is the plan to be investing, what is the size of the portfolio, because usually we say that 20 startups is a good number to have a portfolio so that you can dilute the risk. So in this program, we work with the leaders to develop this thesis, to plan the fund ahead, and then to actually launch the fund. So preparing all the marketing materials, supporting the leaders until they can run the first investment committee of the fund. And then this is when the program ends. Right now we have seven groups inside this program. And five of them, I think, in the third quarter will be launched officially as a new COREangels fund.
That's very interesting. And are these funds that are being started they are independent of Core Angels, or is Core Angel also involved in some way, like
Yeah.
carry or maybe management fee, something around that? Yeah.
Yeah, we are involved, but we don't have any shares on the fund.
Okay.
So it's an independent entity. So when the leaders they decide to apply to the program, when they end the program, they will incorporate a fund. It can be a regulated fund. When we use the term fund as an angel fund, not necessarily is a regulated fund. It can be a structure that is a limited company where the angels are shareholders of that limited company. Okay, according to the country, to the laws, etc., we establish a framework to work with. And in the end, they are autonomous entities. Okay, but what happens is that we have a licensing agreement where COREangels licenses its brand to be operated by that entity in that country, and we provide all the support to the leaders to make it happen in exchange of fees to COREangels International.
Got it. So there's some sort of licensing fee there.
Exactly, yes. There is a licensing fee, and
Okay.
for that, we provide support in terms of framework tools, templates, conflicts of interest solutions, because
Right.
when you start a fund, things will start happening, and then some issues may come, and they can come to us and try to solve it.
Right. Interesting. So we have talked a lot about angel syndicates and VC funds on this podcast, not so much about angel funds. Is
Yeah,
somewhat
yeah.
like in between that. So
hmm
can you share on how this is particularly different from a VC fund on one end and a syndicate on the other end?
Sure, sure. Great. Yes, the difference between an angel fund and a typical VC fund, the first difference is that in an angel fund, the decision makers are the angels. So what we call the LPs in a VC fund, they are not deciding in a VC fund. In an angel fund, they do make the decisions. Okay, so the owners of the money are the ones making the decision. This is the first difference. Okay, it means that we can be crazy enough to make some decisions of investment, which is hard to happen in the VC fund because the fund manager is investing the money of others. So it's natural that he or she can be more cautious in some things. So this is the first difference. The other difference is that besides making the decision, after the investment is made, we have our model involves a lot of dynamics to be promoting the engagement of angels with the founders. So if I'm an angel in one of COREangels fund, I can be involved as much as I can with the startups, with the founders. It means that we'll have many meetings with the angels. We have a special role that we call the archangel, is an angel that is close to a specific startup in that fund. So if I'm an archangel, I will be meeting those founders like monthly. Sometimes if they are in the middle of a crisis, it can be weekly or every day, depending on what's happening. And so this way we guarantee that the angels are really close to the startups and they are really understanding what the challenges are. Because we don't want to receive only the good news. We want to receive the bad news also because we believe we can help them somehow. This is the basic differences to a typical VC fund. And when comparing to an angel syndicate or an angel club or network, usually these networks they work in a way that you pay a fixed membership, like an annual membership, that allows you to go to meetings and get to know deal flow, get to know good startups, and make your decisions. Okay, so in the angel syndicate, the decision is individual. You may be investing together with other angels, but it's a deal by deal case. It's not that they are building a portfolio together. So it's a more short term approach. Like I'm going to the meetings, I will be taking a look at the startups. Maybe I'll be interested in one or two. There are some friends of mine that will be interested too. We will invest together. And then, so it's an individual decision in the end, deal by deal. And after the investment is also up to you. So there is no one guaranteeing that, well, you have access to the startups, you will be following up what's happening. And so this is the main difference. And as we are talking about a portfolio, when you have this approach of portfolio, it means that we're talking about long term. And I believe that in angel investing, we should think of long term. It's a patience game, you know. It's not like you are going to invest right now, and in 2 years you have an exit. You know, it's not like that. And I think that the most patient angels are the ones who get the best returns. So it's really important that we have this long-term approach.
Right, absolutely. That's very interesting to learn, and on how angel funds are different from syndicates and VC funds. So the investing is not on a deal by deal basis. It's like all the angels in a group are in it together. So they're gonna
Yeah.
invest in all the startups that the fund wants to back, and they will invest together, right? And it's not a blind pool, so it's not like one GP making the decision. Is there some like voting mechanism there that, okay, we want to make this investment, or someone says, okay, I don't like this so much? How does that
No,
work?
yeah, it works this way. We need to have 2/3 of approval because we believe
Okay.
that if 1/3 of the angels they are not comfortable with that investment, it's already too
Hmm.
much, you know. So we
Okay.
don't want many people to be like, I don't want to invest in this at all. So if we have 1/3, it's okay, but more than that, so we need 2/3 of approval.
Got it. Got it. Makes sense. Awesome. And how are angel funds maybe better for or position themselves as an investment vehicle in front of founders who are raising? How are they? What's their edge in regards to in comparison to angel syndicates and VC funds? What's the edge that angel funds bring in?
Yeah, yeah, I believe that with founders, we have an advantage of mixing both worlds. Like, we have a more personal approach and like a more, how can I say, close approach to the founders, like being really by the side of the founders. We don't want to be seen like the ones controlling the business that they have to report to us and it's not to be we are supportive, so this is one thing. And the other thing is that besides this, we are supportive as individual angels, but we are more formal than them. And so this gives them some kind of structure, formality. So we are, in the end, the angel fund is a company that has been invested by angels, but we have an entity there that is taking care of the investment. So it's something more structured and also with more possibilities of bridging them with other partners for co-investment, for the future rounds, and this sort of thing.
Got it. Got it. That's super interesting. And now let's talk about angel investing as a practice, because there are a lot of people who get into angel investing and get their hands burnt, and then they go away, right? So to start on that front, the first question will be, who do you think should be angel investing and who should not be?
Okay, great, good. That's a great question. And I usually say that our model or angel investment is not for everyone. Okay, I totally get it. I really think that if you don't understand that it's an investment that is very illiquid, okay, this is the money that you're going to invest and that you don't need this money. It's not in your plans to use this money for the next 5, 10 years. Okay, this is money that you need to forget about it for a while because you may lose everything. Okay, and this is for real. You may lose everything. So people need to understand if they have the profile for doing this kind of investment. And I believe that this serves for any type of investment. There are some people that they cannot invest in the stock exchange market, They can't because they don't know how to deal with that. It's too much pressure, too much volatility. So it's a question of self-awareness, So if you understand that you have some money that you want to invest in startups, you want to be part of innovation, you want to be like you see you are pleased to be talking to founders and trying to support the next generation of leaders. If you want to be part of this movement and you have money to invest that you can forget about this money for some years, great. I really recommend you to engage in this activity, read, be informed, and start doing this before, because there is a lot of learning that comes with the practice also. So don't expect to do a course to get a certification and then start doing angel investing. You can start doing it and learning by doing, especially if you are in a network or a fund. But it's a kind of investment that demands patience. It's not something that will happen quickly, and it's something that you need to understand that the startups, their chances of succeeding, they are not the same today and in 2 months or in 3 months. They change a lot. So it's something that is you cannot desperate, okay? Because you may invest in a startup right now that in 1 year they are really bad, and in 2 years they are terrific, and they are doing having a lot of growth and raising the next round. So these things are really hard to face if you don't have the profile to do that.
Absolutely. And do you have any lower limit on the minimum net worth for someone to have to be able to get into angel investing? Is something like
We
that?
always,
Yeah.
yeah, we always recommend that people invest a maximum of 10% of their wealth in startups. Okay.
Hmm. Yeah.
And this will vary a lot, of course, that depending on the stage you are investing, this can mean uh, more money or less money, but more than that starts to be too risky. Unless you already have a lot of experience, you have already made some money with investment, and you are in more advanced positions, you can have more. But to start with, never more than 10%. I would start with 5%, and then slowly look at experiencing, and once having more experience, investing more.
Right. And even that 5 or 10% is for someone with a decent amount of money in their bank. Is that correct?
Yes, but not that much, because one of the
Mm-hmm.
myths that we face in angel investing, and to be honest, in the beginning it was quite like that, because in the beginning angel investors, like if you take a look at 10 years ago, we would say like, well, they are very millionaires. They don't know where to put their money, and they are just throwing money away, putting in some startups. Okay, but it's not like that anymore, because we have been democratizing a lot the access to startups. So if you go to an angel network, for instance, you can have people investing like 10K in a startup, okay, and they will be pulling their money together to do that. So it's not actually a lot of money. In our angel funds, we have angel funds with minimum of 30K as the ticket of interest for an angel, okay? Others, they will have 100K, 150K. But depending on the thesis, it depends a lot on the thesis, because if you're investing in ideas, or if you're investing in startups that are really, really early stage, pre-seed, or if you have a plan of tranches of investment, you can start investing very low. And we see that there is um, there is a universe of many, many people with a lot of capabilities to become an angel investor, but this myths sometimes block their access to angel investing. They believe this is something that is not for them, and it could be, so it's just a matter of getting information, getting in contact with some angel networks, participating in some events, trying to talk to people who are doing this for some time, and getting some hints, and maybe you'll be able to start soon.
Absolutely, totally agree on that. And just to add one more perspective to that,
Yeah,
like you would probably agree that angel investing is a high risk asset class, and it requires a lot of patience. So it should not be the first asset class that you should go to get started with your investing. You should probably
absolutely.
have some other more liquid assets and more stable investments in place, and then angel investing can be an option you can explore, right? Besides, if you're someone who are in the space, who are into startups and know people, then probably you can get started somewhat earlier. But that should mostly hold for most people, that first you should go for some more lower risk investments to
Yeah,
solidify, and then go for angel investing. Yeah.
absolutely. If you talk to any angel investor, this person is already investing in many other stuff. Okay, they are investing in some fixed real estate, or some uh, bank applications. They have been managing their money for some time in other assets. And now they think like, well, maybe I should invest in startups as well. Now I feel like, yes, I can handle it. But again, I believe that if you start slowly, if you start especially if you're starting with a group, I think it's safer for you than just running into some startup by yourself, just because you met someone in an event, or because you fell in love with the solution, or with a team of founders. Then it's riskier, right? Because it's only about your own judgment, it's only about your own money, so it's a lot of risk on top. So I really recommend doing this with others, no matter what the model is. Okay, I'm not saying that it's only our model, but networks or getting people together, it's always richer and safer.
Absolutely, totally agree on that. And what approach would you suggest to new angel investors who are getting in? So, when you already suggested that you should try to do it with others, what other things they should be keeping in mind while angel investing?
Yeah, yeah. One thing that I see many times in our funds, and I hear a lot this from especially the recent angels, is that they feel like, oh, I could have started earlier. I was thinking, I was doing a lot of reading. I was like trying to have a course here or get a certification or and in the end, of course, that information always helps, okay? But there's nothing like practice, because if you are investing, especially if you are with others, you learn so much from the other's perspective. Whenever I'm in an investment committee, I invest into funds. Whenever I'm in investment committee watching to a startup to pitch, I learn a lot, because it's not only from the founders, but also from the questions that my colleagues are making. From the question or from the discussion that we have after the pitch. And this kind of experience, there's nothing that you can read about it. It's just experience if you're doing it. So I would start the sooner possible. Many people that I talk to, also many angels, they say, Cynthia, I didn't start before. I haven't started before because I didn't know it existed. And this is shocking, right? Because we are in the sector and we know that it exists, but for the people who are outside the sector, they don't know that it's, or when they know it exists, they believe this is something not for them. They believe this is something for the millionaires. This is something about Shark Tank, or this things that we see in the media. It's too glamorous, too high profile, and they don't resonate with this. So I really encourage people, and many of my friends, they know about my activity and my passion, and they ask me about this. And I say, I really recommend you to get informed. There are many, not only COREangels, but there are many other models, people sharing content. Read about it, go to some events, and start as soon as possible. I would recommend this. And the other thing I would recommend is enjoy the ride. Angel investing is not a boring investment. We invest in startups because investing in real estate, in applications, in debentures, all this sort of thing is boring. It's just to make money. Startup investment is a different thing. It's a different game, and you will be thrilled to understand how much you can get from this, besides financial returns, or besides potential financial returns.
Absolutely, totally agree on that. And cycling back to the model of angel funds that you told us about. So, in that model, so there are members in a group who are investing together, right? And
Yeah,
there is a consensus that they are all going to invest together in every deal, right? So, for that to happen, everyone has to have the kind of capital to be able to commit to every deal and to be able to build a portfolio of at least 20. There has to be some amount of minimum capital required for all members in that group to be able to work that out.
yeah.
So do you like confirm that initially before forming the group that okay, all these members are capable and can deploy, this is the total amount of money that'll be required to build that portfolio that we want?
Yeah, in a sense, it's different from a VC fund, because usually VC funds, they fundraise, and then they say, well, we have this amount of money, now let's go and find good deals to invest in. Okay, in our case, our funds are, as we say, rolling funds. So when you open a fund, you have the first angels committed. So you have a group of 5, 10, 12 angels that they said, okay, I am committed with the minimum amount per angel, and they invest in the fund. Okay, and then we start selecting startups for investment, but in the same way, we are admitting more onboarding new angels to the fund. So the capital is not all raised upfront. So we raise some capital in the beginning to fund like 3 or 4 startups. And then as the fund continues, we are still onboarding new angels. So yes, they have to commit with a minimum amount. This amount can be reinforced whenever they want. So it's not like quotas. I can start investing in a fund like 50K, and then 1 year later, I say, well, I think we are building a great portfolio. The startups are looking great. I'm really enjoying the experience. I want to invest 30K more, and I can invest 30K more. But yes, to start, they have to commit with a minimum ticket.
Got it. So it's the rolling fund model that you're following at Angel
Yeah,
Funds, right?
exactly.
Got it. Got it. So the money is paid upfront and not after the decision is made that okay, we are going to make the
Yes,
investment.
yes,
Yeah.
yes, exactly.
Got it. Got it.
What
Makes
happens
sense.
sometimes, although, is that sometimes you have a very, like, you go to investment committee and you have three startups, and the angels decide to invest in all three, and but you don't have all the money for all the three. And what happens sometimes is that the angels who are there, they think, well, this is a very good opportunity, I'll put more money, okay, and then they invest according to the demand, so according to the opportunities that are showing. Or sometimes they don't have the money, but they'll say, well, there is a friend of mine that has been really interested in joining us. Let's call this person, let's show this startup, let's talk about the fund and see if this person can be part of the fund as well. So they help in the fundraising process as well.
Got it. Very interesting. And another important aspect of investing into startups is deal flow, right? You have to have
Yeah.
quality deal flow to be able to make quality investments, right? So how do these angel funds that you're helping farm at Core Angels, how are you helping them get good deal flow?
Okay. Yeah, and this is a major factor, I guess, especially because people, they don't have time to be, if you're a solo angel, if you have an individual experience as an angel, having time to go to all the events and find the startups, this is really hard. Okay, this is one of the advantages of having an angel fund. So the leaders of each fund, usually they have two roles. Okay, usually we have two leaders. One is the angel leader, which is the person more connected with the angels and fundraising, and the startup leader. And this person is extremely important because it's the person more connected to the ecosystem, like to the accelerators, the incubators, all the programs. Is the person that is navigating in the event. And one of the most important things that they do is they establish partnerships for the deal flow, because this guarantees the sourcing. Okay, the sourcing for the leaders. And so it becomes easier for you. Instead of chasing startups, you will receive it will be an inbound action. So you will receive startups from these people because they already know that, well, I'm in this COREangels fund here. Our thesis is this, this, and that. We are interested in investing in this type of startups. Whenever they have those type of startups, they recommend it to you, so you receive a lot of deal flow. But then starts the one of the works of the leaders, that is evaluating these startups, doing all the um, screening process. So talking to them, guaranteeing that first they are part of the thesis, they fit in the thesis of that group. And second, that they meet the minimum requirements that those angels expect to see in a pitch. So it's completely different. When you go to a pitch day, a demo day of some organization, you have very low filtering of those startups. When you go to investment committee of an angel fund, there are two people that have already talked to these founders. They have been challenging these people, receiving financial forecasts, making tough questions. And then if they are there in the investment committee, they have already gone through a very specific funnel to be presenting there. So for the angels, it's quite convenient. You go to a meeting where you have two or three startups pitching, and they have gone through this funnel. So the quality is completely different. They are much more prepared. They come to you with a lot of information, and it's not only the information from the founders. You also have the information from the leaders. Many of our funds, the leaders like to share like a one pager with their evaluation about that startup, saying things like, well, we selected this startup because of this, this, and that. We think that their highlights are this, this, and that. By the way, there are some issues that we could not assess, but maybe we could make questions about it in the committee. So they are very transparent and clear to the angels about what they found about the startup. So it makes a difference. So when you are an angel, it's very convenient in this point of view, and so you feel like, well, I have more information to make a good decision. So this helps a lot with deal flow. Usually we consider like 2% as a good number, is a good ratio of startups invested over scouted. So the leaders, they are they are talking to a lot of people, to a lot of startups, analyzing a lot of business before they bring something to the investment committee.
Right, absolutely. That's good to learn. And uh, another thing I wanted to ask you is in the angel funds model. So, like we know, there's an incentive mechanism in place in venture capital funds. There's management fee. There's carry. Similarly, in angel syndicates, there is carry on the returns you generate. Right? Is there anything similar for angel funds or no?
Yeah. In our model, we have management fees and carry fees as well. The leaders, they are entitled to receive a management fee from the investment of the angels, and we, COREangels International, we receive a small amount of this management fee. And the same thing to related to the carry. So whenever you have an exit and you'll have a distribution of gains among the angels will receive their returns. The leaders of that fund will be entitled also to a carry on it, and we, COREangels International, also a smaller amount of carry on this.
Got it. Got it. Good to learn. And Core Angels is a global community. So I think your funds are spread all across the world, right? So how is that managed, and how do you deal with the different regulations and conditions in different markets?
Yeah, this is the beauty and the challenge of the thing, like being in different countries means that we have a diverse group of leaders, which is extremely rich to us. So we can learn from different perspectives, and each country has a different scenario for startups. Things, and we are, as I said, we are in different countries. It means that uh, whatever is working in a country of Europe doesn't necessarily work for a group in Brazil or in the US, okay, or in Chile. So it's really challenging in this. It's really rich, but also challenging because we have leaders with different profiles. We have angels with different profiles. Some of them like to be more interactive, also not that much. Founders also, they are very different across the globe. But what I like to say is that we need to focus on what is common to everyone. So we are all interested in providing support to the early stage. We are all interested in funding the innovative leaders. We are all interested in bringing good solutions to the world. So this is what matters. If I am more formal, less formal, if you laugh more, or if you're more serious, or this is something we can overcome. Okay, so diversity is good for this reason, but it's quite challenging. As you said, legal frameworks are very different across the world. And this is one of the things that we spent time in the beginning of the program trying to support the leaders in the best way, in the best legal framework for that jurisdiction. Um, and it takes some time. But right now, as we are in different countries, we can already use this knowledge to the future groups. So right now we are preparing our second group in Brazil, and we have already a group there, so we know how it works. So it's just using the same framework, so we become more and more knowledgeable about these matters, and so we can support better the new leaders to come.
Absolutely. And to give our audience a sense of what are the regions where your funds are located, can you name some regions where your funds are?
Yes, we have funds in Portugal, Spain, Italy, Switzerland, US, Egypt, Brazil, and Chile.
That's amazing.
Yeah.
Amazing. Great. And all these funds are investing in their regional startups, or are they open to broader startups from like maybe entire region, maybe Europe?
Um, the European funds, they are open, of course. They invest in European startups, but we have some
Hmm.
funds that they have been making investments outside Europe as well. So
Okay.
the investment thesis is good for focusing the work, but it's not for limiting. So the angels, they are free to, well, if the leaders understand that there is a very good opportunity from a
Right.
startup in one side to be invested, and the angels approve, that's not a problem. We can do that.
Right. Right. Amazing. With that, we come to the end, and let's go to the rapid fire round. I'll ask you six quick questions about the
Okay.
investing that these angel funds are doing, so you can answer on their behalf. I believe Core Angel isn't directly investing into startups, right? Correct.
Yeah.
Yeah, so you can answer on behalf of the angel funds that
Hmm.
you help run. So the first one is, what are the sectors and regions you invest in?
The sectors, well, we have verticals in climate, launching a vertical now in food, artificial intelligence, education, and health. These are basically the verticals, but we have funds that they are agnostic. They are focused in some geographies and industry agnostic.
Got it. And what's the typical stage of investment?
Pre-seed, seed. Sometimes they invest in pre-series A, but not that common.
Okay. Do these funds lead rounds?
In many cases, yes, they do.
Okay. What's the typical check size they put in?
To invest in the startups. Okay,
Yes,
so
yes.
yes, the more pre-seed is like 80K, 100K, and then we have funds that go up to 150, 200, up to 300K.
Got it. Where can founders apply for funding to the angel funds that you run?
Okay, good. In our website, www.coreangels.com, we have a specific page about our funds, angel funds. They can take a look at all the theses, what are the profiles of the funds, and they have a button to apply there in the funds they believe they can match.
Awesome. Last one, where can our listeners follow you?
Oh, good. There is you can follow me in my LinkedIn profile, LinkedIn/Cintia Mano. We have content also available in our website, coreangels.com. Webinars, we make some webinars open to outside CoreAngels community. And it will be a pleasure if you can listen or attend to some of them.
Awesome. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Cynthia. It's been a pleasure talking to you, and I wish you all the best.
Thank you. Thank you so much for your interest and for the opportunity of telling more about what we do here at CoreAngels. Thank you.
My pleasure.